All right, it's about 5 after here on the East Coast, so let's get this thing started. Um, for those of you who are joining in and who haven't been part of the discussion before, just so that you know, I'm sharing my screen in the GME DD Discord on the Stages channel. So if you want to follow along with the screen share, you can do so there. Obviously, if you want audio only, you can get that through the spaces. So let's go ahead and, Joe, if you want to read our disclaimer, and we'll get started.
Wook Capital Management, Inc. and its employees solely provide investment advisory services to family clients and do not provide investment advisory services to the general public. Furthermore, investments are highly speculative in nature and involve substantial risk of loss. We encourage investors to obtain advice from a professional investment advisor and to make independent investigations before acting on information that we publish. We cannot assure you that the information is accurate or complete. We do not in any way warrant or guarantee the success of any action you take in reliance on our statements or recommendations. Past performance is not necessarily indicative of future results. All investment decisions of an individual remain the specific responsibility of that individual.
All right, wonderful. Well, with that legalese out of the way, thank you, Joe. Welcome back to Wook Capital Management's 59th edition of our weekly Wook in Review. So we've got a few stories from the newsletter that Joe sent out earlier this morning. You can access the sign-up link through the link in our profile here at Wook Capital. Click that little newspaper icon, and you can get that in your inbox every Friday morning. So, Joe, so you pinned it here to the nest. We've got a few stories that you included, and then we can talk about whatever people want to discuss after. So, yeah, do you want to grab the reins and get her going? Feel free to take us through it. I'll add my context and thoughts as we go.
Yeah, so first story of the newsletter about Lucid. We've put them on our Wookie watch list. It's obviously not fared too well over the past few years. Values plummeted from over 55 billion to just 5 billion. I will say I live here in Southern California, and I do see quite a few of them. I'd say I probably see 3 or 4 a week, Lucid cars. Granted, it's only in the upscale areas, and I don't think people really are quite that familiar with them. That's one of the notes I put here on the newsletter. That despite their advanced technology, the company lacks brand awareness and obviously therefore sales. Like the main customer is the Saudi government, which supports the company, but it's not exactly like a long-term strategy. So regardless, put them on the watch list. I can't see the company lasting much longer. Maybe there could be an acquisition for the technology or the brand name. Maybe GM or Ford or somebody says, we want Lucid to be a line of cars within our lineup, and then obviously that ends up flopping, but who knows? Rod, curious what you think about Lucid.
Yeah, I mean, we've talked about it before, and it's this equity, as you can see on my screen, let me get my face out of the way, but this was one of the most popular of de-SPACs. You can see in January of 21, a bubbly time. From January to February of 2021, the SPAC went from the $10 of net asset value that the SPAC assets were worth all the way up to a high of over 60. For much of 21, what was formerly, what was it, Churchill something was the SPAC, but for much of 21, all things EV were still in favor. So this stock, though, if you look at the financials, it is just ugly. Massively negative gross profit margins. So, this is revenue less cost of goods sold. Now, with a startup with a high capital intensity company like an automaker, you've got stuff in COGS that's non-cash, sure, but even if you strip away that, it just, when you see a negative gross margin of negative 200, 40, 50%, that's not good. I don't know what the end game for Lucid will be given the Saudi ownership and kind of interest. But in terms of making money selling cars, that is not something this company looks like it is on pace to achieve. Um, I don't know. There's not much else to say. It's really ugly looking financials. Uh, it, and yet it's still worth $10 billion in terms of the market cap, which again, this is a company that has only lost many billions of dollars during its time in public markets. The enterprise value 7.7 billion. This thing at its peak was 90 some odd billion. So just one of many examples of companies that had extraordinary valuations that have cratered, but that still look like they've got a lot of downside as I see it. Um, Lucid is probably in a worse spot in my opinion than a Rivian, because at least with Rivian you've got a little bit more volume, right? Lucid's really just selling these Airs, these really high-end luxury cars that go for six figures. Yeah, Rivians are not cheap either, but Rivian's also spreading its fixed costs over the vans, which it's now also selling to more than just Amazon. Amazon's a big investor still in Rivian. Rivian's got a better chance of survival, I guess I would say. Lucid, I don't know what the end game is. It does not look good. Yeah, you had the chart on gross margins. Yeah, yeah, that's terrifying.
Yeah, not looking too hot for Lucid.
Yep, I'm sure some people made a lot of money shorting it.
Next story I included was about Airbnb. Now, Airbnb is also on our Wookie watch list. Figured out they had an acquisition, their first acquisition as a public company. They acquired GamePlanner.ai, which is apparently a stealth mode startup that was being operated by Adam Shayer. I don't know if I'm saying his name right, but he was creator of Siri. So he worked alongside Steve Jobs with Siri, and obviously the acquisition signals Airbnb's entry into a new phase of innovation, it says, which I found that interesting. It seems like a bit of a wild card of an acquisition for a short-term rental company, but it's supposed to obviously help Airbnb provide better suggestions to customers. Whether or not, I mean, better suggestions to customers is worth 200 million is debatable, but very interesting.
Yeah, I don't have anything good to say about this stuff. I think we're in a crazy AI bubble frenzy. People are just paying what they can pay to try and buy what they think might be worth something. I think it's a lot of just greater fool stuff going on right now. But in the AI vein, it's probably worth calling out. There's breaking news in the last half hour. OpenAI CEO Sam Altman has been, I mean, fired. I guess I don't use that language, but if you read the actual note, Mr. Altman's departure follows a deliberative review process by the board, which concluded that he was not consistently candid in his communications with the board, hindering its ability to exercise its responsibilities. The board no longer has confidence in his ability to continue leading OpenAI. So OpenAI, of course, the one that Microsoft made a meaningful investment into, and that is the ChatGPT owner. They fired Sam Altman. It looks like there's probably going to be some nasty news coming out because when you say something like that, the board no longer has confidence in his ability to continue. He was not consistently candid. There's probably been some nasty stuff that's happened that's come to light that he's been involved in. I saw on Twitter. Let's not take that as the gospel of any source of reliability, but uh, apparently a biological sibling of his in 2 years ago. There's a tweet that's resurfaced this afternoon talking about the abuse she suffered at his hands. So we'll see what comes out. But maybe this is the peak of the AI bubble. Sam Altman getting fired. I don't know.
Yeah, first time I'm hearing about it. Actually, I missed the news, so news to me. But when our company is openly saying that somebody was, well, I guess they're not openly saying this. What was this an internal memo that was released, or was this put out?
Here's the OpenAI.com blog announcing the leadership transition.
Ah, and it states that they lack confidence in his leadership.
Yeah, it's what I read verbatim. Yeah.
Gotcha. Okay, I didn't know if that was an internal memo or if that was the one that they put out publicly. Wow. Yeah, I mean, you can always imagine it's always worse than what the company states. It's almost always going to be a definite. So, if that's what they're saying publicly, then it was much worse behind the scenes.
Yeah, we'll see what ends up coming out. Um, they've made the chairman of the board step down as well. He will stay in his role at the company, reporting to the CEO. I don't know. I don't know the ins and outs of OpenAI, but nonetheless, kind of big, big news to happen on a Friday just before the close. I had heard, or I'd seen a couple of people comment. So as the news broke at 325, Microsoft stock dropped from 373 to 367 in 15 minutes. It's recovered some of that. So it did close the day down 1.7. So it'll be interesting to see as the weekend progresses what else comes out on this Sam Altman OpenAI firing news, and does any residual stench stink up Microsoft with its partnership? We'll see. But to the
Well, the next
Airbnb thing,
story. Oh, go
I
ahead.
just don't know. I mean,
Yeah.
when I see these startup, oh, we're operating in stealth. We've been operating in stealth for a few years. I mean, I don't know. Who knows how real the thing is or isn't?
I think a lot of the stealth startups are really hired for the talent rather than the product.
Yeah, I didn't read the interview, but yeah, I mean, again, I just think we're still in a frenzy. People are willing to pay uh, very high prices for anything and everything AI. Um, I had a conversation with another investor, and he, it wasn't even joking, but he was basically telling me that what he's interested in pursuing and working on right now is ways in which to basically just do what this company did to Airbnb. Make something look like it's very much AI, and then just sell it to somebody for a very high price. So I don't think this will be the last acquisition of what will probably be worth nothing. Frankly, I think that many of these companies buying these supposed AI startups and capabilities will find that that money is worth nothing. But we'll see what happens. All right. So I guess let's move along then. People want to talk more about AI at the end. Feel free. So, Joe, you put the story in here. We talked about it on.
Yeah, next about the auto pay increase after the strike, following
Mhm.
along to the other foreign manufacturers.
Yep. Yeah. So we talked about it a little on Wednesday, but just to recap, we know that the UAW got a pretty rich deal with the three legacy Detroit big three, if you will. And now the byproduct of that is that we've seen three international automakers raise wages for their American workers. The first fast follower was Toyota, then Honda, now Hyundai. I'm sure Kia will likely follow suit as well. But raising wage levels for their workers, and for Hyundai, this is Alabama, Georgia. So this was something I brought up last time: is are we going to see these wage increases just in proximate markets, from a labor market perspective, or is it just going to be near where the UAW has facilities, or will it penetrate deeper into the South where the Detroit Three don't have as much historically? Uh, the answer that Hyundai is giving its Alabama and Georgia workers a 25% raise over the next 4 years appears to be yes, that it will span more than just the really close geographical competitors. So this is good for the workers. Perhaps it's not good for consumers insofar that this is an added fixed cost to each and every car that's made by these automakers, and therefore that fixed cost will be evident in the sale price of the vehicle. If the OEMs want to maintain their margins, they'll need to raise prices. Otherwise, their margins will deteriorate, which could be a mix of that. But higher prices for the end consumer is what this tells me. Uh, which, if you're an automotive worker, that's good, and if you're not, well, perhaps not. But yeah.
Next story we have is about the 4% rule, which this was news to me. You liked this story. You put it in our highlights section on our shared note here. But personally, like, I didn't know anything about this. I'm 24 years old. I don't think too much about retirement. So, Rod, maybe you do. I don't know.
I've been planning
That's
for it
still pretty
for
early to be
15
planning for it.
years. Been planning for my
Yeah,
retirement since I turned, well, even before I turned 18.
yeah. Rod, how old were you when you moved to Florida to save on your state income tax?
That wasn't why I moved to Florida, but I did move to Florida after undergrad because I knew I would never want to deal with a New York
I can't
winter
think of another
as an
reason to move to
adult.
Florida. No, I can't. It's not so bad over there. It is quite hot, though.
But yeah, the 4% rule is this kind of general rule of thumb that as a retiree, you could withdraw 4% of your principal every year without finding yourself at risk of exhausting your savings. So, from Morningstar's perspective, which good little tie-in, the book club read on Tuesday night was from a Morningstar analyst. So Morningstar, though, runs these simulations basically to find the spending rate that will allow retirees to maintain a steady annual income adjusted for inflation without running out of money in 90% of those scenarios. So because of how low interest rates have been in 2021, Morningstar reduced that longstanding 4% kind of rule and said actually you need to be withdrawing only three and a third, or 3.3 rather, which meant that all else equal, you're capable of withdrawing less money as a retiree. So because rates have risen, again, the safe withdrawal level, which had inched up from 3.3 to 3.8 last year, is back to that kind of 4% mark. And the logic is, in the story that I have on my screen that folks could see or that might have read in the Wall Street Journal earlier this week. So, using the example of someone who retires today with $1 million portfolio who has the traditional kind of 40% stocks, 60% bonds, they would spend no more than that 4% or 40,000 in 2024 with a 3% inflation increase. Then they'd be able to withdraw, for 41,200 in the year after, regardless of how the market does. And basically, the Morningstar simulation scenario analysis is such that the vast majority, more than 90% of the time, the retiree could continue to withdraw that inflation adjusted 4% and not find themselves destitute, running out of money down the line. So it's typically, I think they use a 30-year horizon. So if you're a retiree, you're, I guess, let's call it around 60. So the assumption being that you're going to be able to retire, withdraw your 4%, and not exhaust your retirement savings over that 30-year window. So obviously that is going to depend on what the market does. If you retire and in the first year of retirement there's a financial crisis and the value of your assets gets cut in half or worse, well, you might need to go get a job again.
It also depends where you retire. Obviously, there are some places it is much cheaper to get by than it is here in Southern California. So, next story is the Battle of Gaming Portables. So, I just kind of tied a few different things together with this. So, we know Valve released their new Steam Deck on Thursday. It's got an OLED screen, more storage, better battery life. Says it's got faster Wi-Fi, so it can download games quicker. And it also coincides with Sony releasing the new PlayStation Portal on Wednesday. So obviously the difference between these two devices, one's by Valve, one's by Sony, and the Valve device is a full-featured gaming console. Essentially, you hold it in your hand, and it's got a graphics card and storage. Everything is all on board. While the Sony's PlayStation Portal is just a game streaming device. So to have a PlayStation Portal, which is about $200, you must have a PlayStation 5 already. So essentially plays your PlayStation games as long as your PlayStation is turned on and connected to Wi-Fi. So you don't actually have the ability to take it on the go unless you're also like mobile hotspotting off your phone, in which case the game's probably going to be pretty choppy. You're looking at more like single player games, puzzle games, things like that. It's going to be tough to consider the latency with like a first person shooter or anything competitive if you're streaming the game to your little controller that has a screen in the middle of it. Which I mean, it's a funny looking thing. I'll see if I can find a photo of it on Twitter and pin it in the nest here. Um, Here's a photo of it. Let's see. This guy says, I just got a chance to mess with the PlayStation Portal, and it sucks. Poor visuals, crappy latency. Tried with his PS5 over a couple different networks and over a wired connection. Nothing he does, he says, makes it work better for him. I mean, like I said, it's probably great for single player games, slow paced games, but you can't expect to do anything competitive on it. It does seem like it would be for the kind of family that has a PlayStation in the living room and somebody else wants to watch Netflix or do something on the television, and the other person wants to keep playing. So just grab the PlayStation Portal, leave the PlayStation on. You can play while they watch Netflix. That's cool. If you're living with somebody and you're married and you want a game and they want to watch TV, maybe it works for you. Maybe you should just get a separate monitor. I don't know. It's not for me personally. I don't like anything that increases latency and could potentially be the fault of you losing a battle or something like that. Steam Deck, on the other hand, like I said, it's got all the hardware built in, so it's pretty much just a portable little gaming computer. It's also a weird device because the kind of people that usually game on Steam and game on PC like care for the best peripherals and the best accuracy with a lot of their gaming. And when you have joysticks and a lack of as many keys as a keyboard would have, you're not really gaming at a high level. It seems like it's a device intended for casual players, but I don't think casual players are really gaming on PC that much. So it's a weird device. Still, they're saying it's selling out, which is just cool. I don't know how many they even made, but
So
not for me.
they disclosed in the reporting that came out with the refresh that they've so far sold multiple millions of the handhelds. There's no further
Of the
breakdown
Steam
there.
Deck,
Right. They've
including the previous model with the old screen.
So Valve won't share sales figures, but said it has so far sold multiple millions.
Interesting. So that's probably 2 million. Like, I don't know anyone who owns one of these. I actually went back on Steam recently, tried the new Counter Strike out, and realized I had a Steam balance of a few $100s just sitting on my Steam balance. And I was like, well, how do I get this out in cash? I actually don't really care to buy
You
hundreds of
don't.
games of it. You can't. So I found a subreddit where what people do is they buy Steam decks with their Steam
Oh, and then they
balance
sell
and
the
then
deck.
sell the deck. So that is one way people get cash. So maybe there's a few people doing that. I don't know, a couple million, probably not, but that is something I saw that made me laugh. I'm like, well, I guess that makes sense. And then obviously all ties us together with Nintendo. They've got the Switch. It still dominates. I was surprised to learn it is the third best-selling gaming console of all time, only behind the PlayStation 2 and Nintendo DS. It's news to me. I didn't know it sold better than the Wii. I remember when the Wii first came out, it seemed like everyone had one, and to hear that the Switch has done better is surprising. But I think it's also been Nintendo's staple for longer. It's been almost a decade now. The Switch has been the forefront of Nintendo. I mean, they don't have a console and a handheld anymore. It's just the Switch, and it's great. I mean, I still have my original Switch. I've bought and sold Switches a few times, but I still have like the original model, and it still does everything it needs to do. I keep mine connected to the TV. I've never really held it and just played it that way. I think the screen's kind of crappy for doing that, but when it's on the TV, it doesn't matter. So it's gets everyone together, surround the TV, play some Mario Party, some Mario Kart, things like that. But Nintendo announced they will be launching a Mario Kart 8 bundle on November 20th. So, yeah, I'm sure that'll be a hit this holiday season. Whenever I
I'm
pull
not
out the
sure who
Switch,
who on this
more
planet doesn't own
Mario Kart.
Mario Kart 8. I
I
mean,
know
they've
that
sold
game has been.
quite a few copies of Mario Kart 8 in the many, many years. They ported
Yeah,
that over from
they
the
came from
the
Wii
Wii
to Wii
U,
U to yeah,
but the power of Nintendo's model that they can literally release, and they're doing it. They have what is it, Super Mario RPG, uh,
yeah. That
being
looks cool.
re-released, which I have on my Christmas list at least. I remember that came out in '96, so I was 7 years
Yeah.
old. And I vaguely remember the game. I don't think I myself owned it. I think a friend had it, and I never got it myself. So I'm excited to play it. But
Well, I
again,
think the
how
power.
much work for you're redoing? I'm sure the graphics, and I am not a game designer or dev. I don't know what percent of time it takes to remake a game versus a game from scratch. I have to think that for Nintendo, it's just a lot more profitable to do that than a completely unproven character or game.
We should have gotten Smash JT in this conversation. He used to be a game tester. He would know all about it. But yeah, I mean, I think porting games is just a killer model for Nintendo because people that love Mario, and they don't care if it's an old title. Like if I have people over and they see the Switch, they want to play Mario Kart. They're not saying I want to play Mario Kart 8, I want to play Mario Kart Double Dash, I want to play Mario whatever. It's Mario Kart,
Yeah,
and I can pull up any Mario Kart, and they're happy. They don't care if it's a re-release of one that came out 8 years ago. As long as they're moving a cart around, they're happy. So definitely a good model for Nintendo. Just keep putting out these re-releases. People will buy them.
yeah. And we know from what's been reported that whatever their next generation console is expected to launch. Let's not call it next generation, but the the follow up to Switch is expected to launch in 24 from all the reporting that I've seen. So expect that in the coming months. They're kind of finishing up the last of the AAA releases for Switch as it is long in the tooth. I mean, this is seventh year, I think, seventh holiday, sixth or seventh holiday for this system. So it's really done incredibly well for Nintendo. So obviously the benefit and it we talked about it earlier in like the second quarter for say the retailing side for GameStop, they were a beneficiary of Breath of the what is it? Tears of the Wild Breath. I don't know the last Zelda game that came out, which I own and I still need to finish. But Nintendo does still see a higher mix than the other big console makers of physical media, and it will be interesting to see what it looks like for this next generation device next year. If I have all my Switch cartridges, can I put them in? How does that work? That whole interoperability thing. It's like you're trying to walk the fine line if you're Nintendo. Of you certainly want people to buy new software for the new hardware, but you also don't want to spurn those that might have a large collection. So yeah, we'll see
Yeah, I remember
how.
when Nintendo released the original DS, they kept the Game Boy port, and then they kept it on the DS Lite as well. And then after that, they started getting rid of it. And there's been better backwards compatibility of recent years. Like if somebody owns the original Xbox One, which came out over a decade ago now, they would still be able to, or feels like it, maybe it's about a decade, they would still be able to join party chats and connect with people on the newest Xbox, which is, interesting because when 360 and the Xbox One were the latest consoles, you couldn't talk to people or communicate, or the operating system was entirely different. But now it seems like Microsoft has been dedicated to updating, the older models as well and keeping them largely still able to play a lot of the same games. So it's interesting. I'm curious what Nintendo will do with the next one.
I have a chart on my screen here. I'm looking at the Nintendo chart. One of the things with Nintendo, as with any company that has a meaningful net cash position on its balance sheet, so Nintendo's price to earnings doesn't make it look so cheap because the share price, the market capitalization, uh, is high due to that very large cash balance. So their net debt, Koyfin tells me that they have just shy of $14 billion of net cash, negative net debt, if you will. So they have huge net cash balance. They've always had a very large net cash balance. You can see going back 10 years that they've always had a lot of cash in their balance sheet. It's not unique to Nintendo. It's very much a thing that Japanese companies, are not generally viewed as the greatest capital allocators because they often maintain balance sheets like Nintendo's, where and I think people have heard me talk about Gravity, which is a South Korean gaming publisher as well, that has a huge, literally almost as much cash on its balance sheet as the equity trades at. So it makes the price to earnings ratios look richer than they really are for these sorts of companies. But then that's why you need to consider the enterprise value. You need to consider the meaningful negative net debt number, or net cash, if you will, number. So when you look at on an enterprise value basis, Nintendo, um, you're paying, at least from what the sell side analysts have, you're paying about 12 times next 12-month EBITDA on an EV basis, about 13 times EBIT. It's not crazy rich valuation, but again, you're buying intellectual property that's been around for decades. That I think, at least when I think about Super Mario and the whole family of characters, like that's some of the most valuable intellectual property on the planet, and I don't know that that's getting like the appropriate valuation. I think if they had a better capital allocation approach, it would be a much, it'll be a different conversation, I guess. But yeah, Nintendo keeps on chugging. If you look at how little they have to spend on capex in the context of their revenue, we're talking about a company that over the last 10 years, or rather, at least in the last 5 years, is spending less than 1% of revenues on capex. So going back to the port discussion, right? They're not having to spend so much on completely new content on a regular basis. So the wonderful well of Nintendo IP is not going to run dry. They can keep tapping it, and it's just a great model.
Yeah, just like some of Disney's, classic movies, classic stories don't age. Neither do a lot of the Mario games. And I was just in Osaka, Japan, back in was it June, and the Mario World they have within Universal Studios was absolutely packed. Like it was the hottest like uh, theme park within the park, and everyone wanted to see Mario. And I'll be honest, that's the only reason I went. I didn't care for going to Universal Studios as a 24-year-old. I don't really need to see all the amusements, but Mario World seemed cool, so checked it out. And to actually do anything within the Mario World, you have to first of all get a ticket to Mario World, which is separate from Universal Studios ticket. You have to then um, get in a line, wait a very long time with a ton of other people that want to get in there, and then it opens at a certain time, and you have a certain time slot you're allowed to go in. Once you're in there, they try to get you to sell. They try to get you to buy a Mario bracelet, and with the bracelet, you tap the bracelet up against the games, and you can play the games. And it's like $50 for this little bracelet. So I, of course, had to be a sucker and buy this bracelet so I could do anything within Mario World. So now my total entry cost is doubled, and I'm using this bracelet to play the games. And then on my way out, I was like, I don't need this thing. They think it's going to be a souvenir. For me, I was like, I'm not going to do anything with this. So gave it to some little kid on the way out who was in a family, big family. I was like, save them a little bit of money because I'm sure each kid's going to want their own bracelet. So this kid took my bracelet, left, and it was a cool experience. But yeah, it really showed me the power of Mario. Everyone was excited to be in Mario World, like parents and kids alike. So really, really is some powerful intellectual property there.
Probably going to play some Mario Kart in a little while here. Have family coming over, and almost every Friday when we hang out, we play Super Mario Kart or Mario Kart 8, whatever you want to call it. And yes, I am very good. I almost always win.
Do you snake a lot? Is that what it's still called? I remember back when I played Mario Kart, you can like just drift on all the straights, get past
I'm
everyone.
quite good at drifting. Yes.
Yeah.
But the wonderful thing about
Okay.
Mario Kart though is it really, I mean, there's that wonderful element of chance, and if you find yourself toward the back of the race, you're going to get some wonderful weapons in your question mark boxes. So you always have a chance in Mario Kart. Somebody hits you
Yeah.
with a bullet
Yeah.
bill. Oh, you love it.
Yeah. Mario Party does the same thing. I've been playing Mario Party quite a bit, and if you're doing bad, they'll say like you're down several stars towards the end of it. They'll just give you one. Like the game will find a way to just give it to you. And it's good because then the kid who you didn't want really to play with you because they're 8 years old and you're trying to play with some level of competitiveness, he gets to stay in the game. Doesn't feel too bad about it. So Mario games have always done a good job at keeping everyone happy.
All right. So that was the last story that we had prepared, but we did, as we kind of alluded to earlier, we had our last book club of the year on Tuesday night. I think Joe, you posted that to YouTube if people missed it and want to catch the
Yep.
replay.
Pin it in the nest as well.
Yeah, we did not host a discussion on the Warren Buffett way. We hosted a discussion on the little book that builds wealth. And yeah, I mean, really, we talked about it, I think, on Wednesday, but obviously we talked about it a lot on Tuesday. It was a good read, though, for really anyone who wants to think more about strategically contemplating businesses, really thinking through what are their competitive advantages, are there elements of sustainability in their advantages, what are the elements of competitive advantage. Again, I thought it was is well done. Somebody who has an MBA in competitive strategy, it was a nice refresher for some of the concepts. But I think those are core concepts if you're truly investing and not just trying to make rank speculations that you should have in the back of your head when you're analyzing companies. And then the last book, which was in here that we got deleted out of conversation with Nathaniel Popper this afternoon, actually, he'd let me know the tentative release date is now June of 24 for the Degenerate Generation, which will be interested to see how that shapes out when that gets released. But yeah, that's about it for prepared content this week. If anyone wants to chat or ask questions about anything else, please feel free. Otherwise, yeah, we'll probably wrap it a little earlier today. So I did see it just happened, another kind of like breaking-ish sort of news thing. I've been following Overstock, well, the artist formerly known as Overstock, which is now known as Beyond Inc. So their largest shareholder just put out an open letter to the board. I guess within the last few minutes, this came out. So I haven't even read the letter yet, but it's several pages from JAT Capital Management, who had filed a 13D a couple of weeks ago. So I heard a Mark Cahote's interview talking about what's going on at Beyond. And remember, this is formerly Overstock, the e-commerce drop shipper for home furnishings, who bought the rights to Bed Bath and Beyond's brand and IP out of the bankruptcy process. They decided to rebrand their consumer-facing business as Bed Bath and Beyond, and they decided to change the company's name from Overstock to Beyond Inc. So there's been this kind of kerfuffle where who is now the former chief executive, Jonathan Johnson, was kind of forced out uh, by what's been happening here. What I've come to understand is there was a kind of a promise made that Marcus Lemonis would be brought in as kind of executive chairman. While Lemonis is on the board, it appears there's some disagreements between shareholders and the incumbent board. Who to thunk it? So either way, always interesting to see investor letters on a Friday, just like with the OpenAI news right before the close on a Friday. So, anywho.
The OpenAI news is all over my Twitter timeline right now. I see everyone's talking about it. There's actually pretty big space going on talking about it. So we're, of course, on the sidelines here with our small little space, but that's okay. It's always fun to have a nice, tight little group.
I just
Baron AI
pinned.
and Metaverse asking to come up.
Yeah, but before you chime in, Baron, I just pinned. I had asked this question yesterday. The poll just ended. I forgotten about it, but I asked the question of is the U.S. economy, or rather, I had this sentence of the U.S. economy is near the blank of the economic cycle, and the three options were beginning, middle, or end of the economic cycle, and it looks like the vast majority of respondents believe the U.S. economy is near the end of the economic cycle. So I just pinned that. If people wanted to see that poll, about 300 people responded. But Baron, always nice to hear you chime in, sir. Hope you had a nice week.
Yeah, hi Rod. How are you?
Doing all right. I am looking forward to having some dinner because I haven't eaten yet today.
Okay, yeah. No, so what I don't know about this company Overstock. What do you think about it? What's the thesis?
I'm long Beyond and short Wayfair right now in my personal account. Uh, it's not a complicated business. I mean, but with Beyond, the challenge is that you have the core, retail e-commerce dropship business, but you also have that they own meaningful stakes in a bunch of blockchain related startups. And the view of JAT, of I think Cojotes and Lemonis, is that the value of the enterprise is not reflecting the value of these kind of disparate niche-like assets that they own under their MediG Ventures arm. The balance sheet is very different than Wayfair's. They don't have debt; they have net cash, and they can survive an extended downturn that it seems like we might be going through. From there's inherently less furnishings being done when there are fewer homes being sold, new or existing. So that activity seems like it'll be subdued for a period of time. And when I look at Wayfair, uh, I think Wayfair is just a really weak player that's very overvalued. It's one of those retail meme favorites. So I'm long Beyond, short Wayfair.
Okay, but like I have some shares of this, but I'm not able to make movement. Like, what's your view? Like the guys you are talking about, codes and other people. I mean, I have read like some contrasting views on like some people say yeah they're stock pumpers, others say no, these are serious guys. So, what's your view on them?
On who?
On like the people who are backing the new guys because I have read like not like I have very small positions, so I have not like done some deep dives. So just wanted to know like the guys you are talking about, these guys are serious or like because I've read like these are just stock pumpers.
I mean, I'm looking at the letter. from JAT Capital, and quote, as we have stated repeatedly, JAT Capital is not an activist fund. And then later in the paragraph, we have taken the more active posture with Beyond because, quite frankly, I have never seen such poor behavior by a board in my career, unquote. So I can empathize with Mr. Thaler at JAT, feeling like the board is not doing a good job. Mark Cahotes has been invested in the common stock at Beyond since I think 2016. So I don't know that I would agree with any characterization that these people are stock pumpers. I think they very seriously think that the value at Beyond is disconnected, and that these actions should help to remedy that, which seems as is normal, the incumbent board is not as receptive to their ideas.
Thanks a lot.
Yeah. But yeah, so it's 4:50. Covered all the prepared material. If anyone wants, to shift the conversation elsewhere, please feel free to request. Otherwise, we'll wrap up here shortly.
Spotted this email on my Twitter feed. It's a screenshot of an OpenAI notice saying that the billing system is being adjusted for API accounts. So instead of receiving a bill at the end of the month, purchases need to be made in the form of credits before you use the service. So essentially, no longer waiting till the end of the month for your bill to be fulfilled. Rather, you have to pay on the spot. Which, this Twitter account saying cash flow problems. I don't know. I don't know if you could call it that. I think it seems more like just trying to combat people taking advantage of the system. I'm sure plenty of bills were left unpaid. So, yeah, thought I'd still share it. Some people blaming it on Altman. Who knows? But yeah, it's pinned in the nest as well.
Okay, it looks like he
He also
released
came out with a tweet. Yeah, right here.
a minute ago. Quote, I loved my time at OpenAI. It was transformative for me personally and hopefully the world a little bit. Most of all, I loved working with such talented people. We'll have more to say about what's next later. Interesting. All right. Hey, Andrew. Muted, sir. Hey, go ahead. I'm not sure if he can hear me. Can anyone hear me?
I hear you, Rod. Andrew's still stuck on connecting. He does have his hand up, I see. Andrew, you may need to step down and come back up if it's being glitchy.
But yeah, I see there's a bunch of different OpenAI related spaces going on right now. So we can not beat the dead horse that I'm sure will be beaten all weekend by folks. But But yeah, Andrew, if you want to request to come up, I'm going to invite you up to speak. I don't know if it's just Musk didn't pay his bills again.
Here we go. Andrew's up.
Oh, hey guys, can you hear me? I was
Mm-hmm.
glitching before. Sorry about that. Yeah, this X advertising thing, it just seems like this is snowballing. I thought he brought in Linda to to do her job there. It just seems like he's interfering massively. I think it's going to bleed over to Tesla, if not already. So yeah, but not a bad day today for me, just because of energy. Energy was bouncing, and I don't know, Rod, if you're still involved with coal. Coal had a really good day today. It was a little bit of a surprise to
A
see.
little BTU.
Yeah, BTU. Elliott, I think they sold another stake the other day at 22.90. Usually goes down after that, but we popped today pretty nicely.
Yeah, energy. I'm kind of blown away how much crude retraced and how low it had gotten, and the kind of just laughable with how ping pong these freaking markets want to be, where you could get will crude all of a sudden now go from it hit almost high 70s. We didn't get any replenishment of SPR, and will it now just something happens that sends it back toward 100? Who knows? It does seem like the signals are that demand broadly is not looking as maybe robust as it did a few months ago. At least that's what I'm getting a sense of. And obviously on the supply side, you just have seemingly more being done with less. Like I saw, Calvin likes to call out. He was on a little rant about the rig count. And it's like, yeah, rig counts keep dropping, but we had this discussion a few months ago where rigs writ large are becoming more efficient. A one for one comparison of rig counts today versus some point in the past is not that helpful, because drilling rigs simply continue to get more done with less. So like, I'm becoming less bullish energy. I'm still very overweight energy and E&Ps and refiners, but I'm less bullish than I was a few weeks back.
Yeah, I'm overweight energy, but I didn't realize. I read something today that Petrobras is the biggest gainer year to date. It's up something like 78%. I own it through the Brazilian ETF EWZ, but yeah, I didn't realize it was up that much. Brazil seems to be doing pretty well.
Yeah, I own the preferred, and I'm sure the year-to-date performance is similar. Yeah, it's 82% year-to-date, and yeah, it's a very, very rich dividend. I own it in my Roth. I also own Ecopetrol in my Roth. I think there was a court, there's something with the Supreme Court of Colombia, something related to removing this double taxation of dividends for Ecopetrol EC that happened today as well. That one is not up as much as Petrobras year to date, but EC is up.
I think that's around
24%.
20%. Yeah, that sounds right.
But I mean, these are both really hefty dividend payers. So like if you want to own some real assets, you want to have some hopefully positive carry, and these are wonderful, I think, things to consider locating in an IRA or other tax advantaged account. Obviously, you're bearing some idiosyncratic political risks with both of those countries and companies, but in my view, you're being compensated quite well still.
Yeah, if you want to take the safer route, sleep well at night, you can own the ETFs, EWZ, or another one I've owned is the Latin America Top 40. I think it's ILF. That's an interesting one too. That has EC and Petrobras, pretty heavy weighting in that. But definitely.
Yeah, I mean the South American oil majors, if you just look beyond the political risk to an extent, it's like you're still just a lot cheaper on a like for like with your North American integrated players. It seems like I own EOG as well in my personal account. I like EOG as I typically don't own large caps, but in the case of E&P, it's not a space I know well enough that I would feel comfortable delving into the tiny, small and micro caps that I'm sure like the Canadian oil mafia guys and the like to talk about, which that's fine, but it's a little stretching my circle of competency. So I guess I stick with bigger, more well-established players personally in that, but I still like EOG a lot. They could they get taken out? I mean, they're probably one of the bigger remaining targets if there's more of this consolidation, which we I think talked about a few weeks back, right? The Exxon deal, and we'll probably see more of that. These guys have a ton of cash. If they think they can buy assets for good prices, it's accretive to shareholders. That seems like what many of them are going to do with their capital, other than just returning it to shareholders.
Yeah. Any thoughts on PBF? I pared back on that, but I still like them. I think the balance sheet is incredibly strong. I think they're ratcheting up the dividend little by little, but I believe there might be some special dividends coming our way in the future. As they have, I think they have they have a 1.5 billion on balance sheet in cash.
Yeah, I mean, I don't have an issue with them repurchasing shares at these levels. I'd prefer them to return capital to us. I'd be fine with them. I mean, the dividend yield now is what? It's a buck now annualized. So you're at $45 was I think the closing price. So
right, yeah.
It's not nothing. It's
well,
two and a quarter.
They've been very conservative as they've been paying down the debt, but I feel like with that much cash, unless they're buying somebody, I think they will go the route of maybe some specials in the future.
It's funny, and I have no idea if they'll do anything or not, but I drew the corollary between PBF and the valuation they got on the St. Bernard renewables, the 20,000 barrel per day renewable diesel facility they invested in and sold half of to ENI, that you've got down the street. I mean, not literally, but figuratively, over in Mobile, the VTNR renewable diesel facility. Based on what PBF got for St. Bernard, and then when I look at what Vertex trades at, it basically implies that they could, if they had a buyer for half of the facility, even at a discount to what PBF got, that you'd get everything else in the business for free. So I like VTNR, but it's all an ugly, refining shitco that management's made some mistakes in the past that people probably won't touch until they announce some sort of transaction. But I mean, PBF, I trimmed it as well, but it's still among my largest holdings. It's less than 5% now, but it's not far off that.
Yeah, I really like the name still. I've owned Valero and PSX for longer, but I like PBF here, and if it drops below 40, I would be adding aggressively. I don't think it will.
Yeah, if management were to get a chance to buy in the low 40s, I would really love to see them hit that repurchase. I mean, it goes back to what you're saying though. The truth is, and I had I'd been looking at a McKinsey analysis kind of talking about the valuations on a lot of these refining assets, how depressed they are relative to pre-COVID still. So, knowing the guys at PBF, if they think they can get a good deal on an asset or assets, I think they're more apt to do that than return the capital through special divvy. And yeah, we'll see what happens. I mean, but some of these refining assets are just still being treated like complete doo-doo by the market.
Right. I don't think there's not that many on them that are on the market, right? There's just the LYB. I think they're trying to sell a refinery still, but I don't think many are for sale. Other than that, I could be wrong.
Yeah. Well, it's definitely, there's a little bit of a dichotomy that's kind of happened where like gasoline, you got gas cracks got crushed in the last few months. You got a modest rebuilding of gasoline inventories domestically. But then the other side of the coin in the distillate is that those inventories are still, for this time of the year, very light. And while it's lovely that thanks to El Nino, the winter weather forecast is for modestly warmer for much of the country, including the Northeast, which of course they're at the whim of having to import their home heating oil, thanks to green zealots preventing pipelines to be built and connect that part of the country. But yeah, I mean, distillate could that's the inventories are so light there still, and it depends, right? Every refiner has different mixes, how much of diesel versus jet versus gas. But yeah, with gas getting whomped, it's nice at least the distillate looks like it's still going to hold up and help balance that out for refiners' performance here in 4Q.
Definitely, yeah. Thanks for sharing those thoughts. Hope you guys have a good weekend.
Yeah, thanks, you too. And yeah, just like stepping back, the 3-2-1 kind of crack spread that I guess a good just market wide proxy that doesn't paint any color on geographical deltas, but the 3-2-1 is still it's still north of 20. It's still meaningfully higher than it was averaging pre-COVID. So even if gas has weakened, again, the fact that diesel's still holding that up, I think refiners, some of them have characterized it as kind of like a mid-cycle environment, and it looks like they're a lot of them are still trading at multiples that would be maybe more like a peak market multiple, because the multiples are just so depressed. So yeah, we'll see. These are unloved assets, and the way you get your capital back to you in this case is going to be, are they on the bid as a repurchase, or as you noted, could it be special dividends? Not my preference would not be them just special dividending it out, but hard to go wrong. And the coal companies, a lot of coal companies, of course, have done that and gotten some, for people who were investing near, when it looked like all was going to hell, probably getting more in dividends than their cost basis by multiples right now on like an Arch Coal or the like. So yeah, it's still though, these are unpopular assets, and some people refuse to touch them. So it's always the best when you can buy stuff that other people refuse to buy. Let me see if there's anything else to mention. I guess I'm blown away. One thing I've been very surprised by all year has been the performance of the Ponzi tokens. Got what, Bitcoin to the dollar. It's done incredibly well year to date. It's, what is that? It's some huge percent. So I'm surprised at, I guess, how strong those things have been. But yeah, I guess that's it. I mean, unless anybody wanted, to go bring anything else up, Baron, I don't know if you want to take it anywhere else. Otherwise, I think we could probably wrap it there. All right. Well, hopefully everyone has a nice Thanksgiving. We are not going to be hosting the call next Friday, although the newsletter will go out. So I hope that everyone does, for those who are here stateside and whether wherever you are in the world, enjoy your Thanksgiving week. Hopefully see some friends and family. Enjoy some nice hot meal on Thursday and some leftovers on Friday. But we will be back next week. We'll do our Wednesday night. We haven't decided if we're going to do it at 7 p.m. or if we might move it up a little bit earlier in the afternoon. I'm leaning on doing it a little bit earlier because I know a lot of people like to go out on Wednesday nights, before Thanksgiving. At least that's what I remember being a little bit younger. So yeah, we'll be back then. Thanks everybody for tuning in to our weekly Wook in Review. and stay safe out there. And we'll talk soon. Cheers, everyone.